Welcome one and all to the Daily Horizon View. Today is Friday, the 26th of July 2019. As always, we are focusing here on the ASX Exchange Traded Funds top 5. So in my few little categories here, we'll see what the top 5s are. Following all along from that, we have our spotlight on ESGI, which is the VanEck Vectors Msci International Sustainable Equity ETF. So if you're looking for some information on sustainable or ethical investing, hang around to the end. It's well worth the time. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Okay, let's have a quick look at the top 5% rising ETFs today. So number one here is ESGI, which is the spotlight, so hang around for that one. ZUSD, CETF, I can get my words right, ILC, MNRS. So just do a quick overview of ESGI, which is the VanEck Vectors MSCI International Sustainable Equity ETF. This one is passive management strategy, investing directly in international securities. That one will give you sort of exposure to healthcare and different types of companies like that, mainly US, bigger US companies. Has a market cap of $27.1 million. You get a very small dividend of 0.45%. So today the ESGI was up 2.13% or 47 cents on not too bad volume for this smallish ETF of 2,200 shares. We're moving right along. Let's have a look at the top 5% falls for our ETFs here. We saw GDX, QR, PMPT, QCB, and Robo. So for those who have forgotten, GDX is, I think, the largest ETF listed on the Australian market with a market cap of $12.3 billion. GDX is the VanEck Vectors Gold Miners ETF, and that tracks the NYSE Arca Gold Miner Index. That one has a market cap of $12.3 billion or thereabouts. Today we saw a fall in the share price here, the percentage fall here of 2.19%, which equates to 89 cents. Not too bad volume, I suppose, or lowish, I suppose, really, for this size ETF on 36,000 shares traded. The top $5 rising ETFs. We saw here SPY, SPY, CETF, ESG, which is a spotlight, hang around for that one, IHCB and ILC. So SPDR, for those who don't know, is the State Street SPDR S&P 500 ETF trust. And that one tracks the S&P 500, obviously. That one has a market cap roughly of $31.3 million. You get a smallish dividend of 1.76% out of that one. We saw a rise today of 82 cents, which equates to 0.19% for that ETF on pretty dismal volume here of 9 shares in that ETF traded today. So dismal doesn't really mean much. Moving right along to the top $5 falls. Let's have a look. We can see here as PMPT, IJH, IHVV, QR, IJP. So PMPT is the ETF's physical palladium ETF, and that one is backed by physical allocated platinum held in the HSBC Bank in America somewhere. I'm sure that they've got a name on your bar of platinum there if you actually own a share in this ETF. That one has a market cap of $1.7 million, a smallish ETF. But having a look at the volume is quite high here, but we saw falls here of $1.95, which equated to $1.62% fall, as mentioned, on 3,000 shares traded. So obviously people trying very, very hard to get out of that ETF. So such a small ETF, that's quite a high volume turnover. Top 5 number of trades, let's see what we have here. VAS, VGS, STW, VAP, last year AAA, so all the usual suspects that we expect to see. Top 5 are some of the larger ETFs on the market. So VAS is the Vanguard Australia Shares Index ETF. That one tracks the S&P ASX 300. You have a market cap for this one of roughly $3.5 billion. You get a nice dividend yield here of 4.45%, which is not too bad. Morningstar give it a bronze, which is effectively 3 out of 5 stars. We saw trades today, 222 trades completed. On the downside, we saw a loss in the share price here of 24 cents or 0.28%. Moving right along here to the top 5 for volume, we can see ETHI, AAA, Fair, Coupon, and VAS. So ETHI is the BetaShares Global Sustainabilities Leader ETF, and that one tracks the NASDAQ Future Global Sustainability Leaders Index. That one has a market cap of roughly $340 million. Dividend yield of 1.6%. Morningstar here gives it a rating of neutral, so that's 2 out of 5 stars, I think, but it's not a high rating anyway, nonetheless. Today we saw a volume of 419,000 shares traded. That's pretty healthy for this ETF. Marginally on the upside, but look at here, we saw a rise in the share price of 1 cent, which equated to 0.11%. Moving on. Okay, let's cast our eye over the top 5 for value now. AAA, VAS, Coupon, STW, and Fair. So AAA, for those who don't follow, is the BetaShares Australia High Interest Cash ETF. So this is a product people are using as effectively a bank, because the bank cash rate at the moment is like 1% or less. So this ETF invests the shareholders' money in deposit accounts in banks in Australia. So they'll have bank accounts with ANZ, CBA, NAB, and the like. So because they're a wholesale customer, they can get a higher interest rate than the average person on the street. So that's why they can pay a dividend of just over 2%. So effectively your interest rate on this one's 2%. This has a market cap of $1.5 billion, so it's reasonably large as well with respect to the Australian market. Morningstar give this a neutral rating as well, so 2 out of 5 stars if you want to think of it that way. Total volume here of 12.3 million shares traded. $4 million higher than VAS. We saw marginally on the upside here, 2 cents, or 0.04%. So people putting their money in that instead of the bank. That's my guess anyway. Okay, let's move along quickly now to the spotlight. We don't want to keep everybody waiting. So ESGI is a VanEck Vectors Msci International Sustainable Equities ETF. So the ESGI gives investors exposure to a diversified portfolio of sustainable international companies listed on exchanges in developed markets around the world, excluding Australia. ESGI aims to provide investment returns before fees and other costs, which tracks the performance of the index. Very nice. So why would we bother with it? So So true to label, an international sustainable ETF encompassing both value-based and impact investing. So it screens out fossil fuels, socially irresponsible investments, combined with environmental, social governance, I should say, leadership and low carbon impact. So they're the type of things that they don't look for and the type of things that they do look for in that whole one sentence. Leveraging the Msci leadership, so that's an external index that they use, VanEck vectors use. So they leverage their leadership, resources, and state-of-the-art ESG data metrics and carbon metrics platforms to choose effectively the best companies ethically investing-wise, or that's what they tell us they're doing anyway. So let's have a look at the net asset value now. $22.38 when I checked. Trading above that at $22.57. Market cap of $27.1 million. Management cost of 0.55%. I think that's maybe 0.05% above some of the other peers. You have a dividend paid in July. Dividend yield is quite low at 0.045%. So ESGI gives the investor easy access to international markets, as mentioned before, with one trade on the ASX. This ETF excludes harmful sectors and weights the index towards companies with a higher environmental sustainable governance ratings, ESG. So the ETF provides aspects of ethical, so at its core, and responsible investing, so broadly across the listing, so the portfolio, I should say. The portfolio includes several software and healthcare companies, and the majority of the portfolio is invested in the US, big companies in the US. We'll have a look on the next slide what we're looking at. So ESG started reasonably well, I suppose. It's only been listed since April last year, I think. So looking at a 10% gain roughly so far since inception. As always, we should be comparing them and not just rushing out and buying the first thing that we see. So have a look at IWLD as a comparison, and also ETHI, which is possibly a good comparison as well. So as you can see, you're looking at, that's your on the graph on the left-hand side here. That's your hypothetical gain, I suppose. So you're looking at the dark blue line there as the performance for the fund. The light green is the performance of the index. So you can see it got pretty well smashed at the end of the end of 2008 into November, December last year, as the whole market did. So there's a holding of 190 companies. Top one here, so we've got Home Depot, Microsoft, Salesforce, Allianz, I think that's the insurance mob, Siemens, which are phones and other technologies. ASML Holdings, don't know who they are. Novo Nordisk, don't know who they are either. So there's a few others there. So Caterpillar and L'Oreal get to go in as well. So that gives you a bit of a flavour for the top 10 holdings. So that's the type of companies they're after there. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.